Yeah. So just looked over some historical volatility following the post-election, and this is different than our one-day scalping ranges that we've talked about before. This is just the same standard deviation, but we're annualizing it, taking a look at how these daily changes evolve over time. And we've got the past 6 months graphed out here. So it is pretty interesting. These are the major Forex pairs. And what stood out to me was you did see the Australian dollar volatility leapfrogging that of the dollar yen, which is usually, if you see that brown line, usually well above, or at least in the past 6 months, has been a lot more volatile than a lot of these other currencies. And so that one coming in just a little bit. But we are seeing across the board just a little leveling out. And so I thought it was interesting to compare. Do we think this volatility, if we are to settle a little bit, are we settling at higher levels?
Right. Or
will we come back down to where we saw maybe definitely in the end of October? Look at all those coming in.
Right.
That's what we saw when we were calculating those standard deviations weekly. They just kept coming in.
Right.
And now we're finally back a little bit higher.
And we talked about that too. Is the right pre-election we saw really euro. You had run the math. The euro 30-day one standard deviation ranges were sub 30 pips, and I was like, that can't be right. So
it's bad.
Can you run it again? and it's like, no, it's right. It's tight. I don't remember euro's range just being that. So we've seen an expansion of that. It's interesting, the Aussie piece, Aussie will, and you need to be mindful of this, Aussie and Kiwi will become more elastic when there's greater uncertainty or they reach a new price level. And we're just rolling into are we cheap? Yeah, we're getting into super cheap areas, and I'm not saying that makes them interesting from the long side. If you're contrarian, it does.
Yeah.
But realize and this is really speaking to that, when they do find a new price level, and I've seen this both in my career trading Aussies well sub of 60 cents and well above $1.
Wow.
So, yeah, and you think, well, it has a proclivity to get to different levels, and that range will start to expand. So as traders, we widen out our expectations of where that is. And this speaks to that. We're at a new range, new level of volatility. Aussie is showing more volatility than the other pairs. I think you'd expect to see that, though. If vol is, mean reverting a little bit, if vol comes in a little bit, does that necessarily mean that Aussie bounces?
Right.
Curious to see your thoughts, just as it's a tough question.
It is, and I think you absolutely could still see a lot of one-sided action if this volatility comes in. If you'll remember, just in the past week or so, I think what attributed to the Australian dollar volatility being higher than the others is we did see two-way action there early on. Everything else, dollar story.
Right.
This one, and you can append any storyline you want to these, add a narrative, but Australian dollar historically has a lot of things going for it or against it. And so we saw some China news last week that immediately cut out some of that dollar story. So, we've seen a lot of two-way action, more so in the Australian dollar. So even if volatility comes back, you could see it just tick higher over the month or lower. But I think one-way price action is definitely on the table, even if volatility comes in.
It's a very good observation that, again, if volatility reverts, it doesn't mean prices revert.
Right.
We know vol does revert over time. That's one of the things we've shown at Tasty Trade, and statistically that's an interesting edge. It is not necessarily indicative that if vol contracts, the underlying that has moved so far, so fast, necessarily reverts. What it does tell us is that as vol contracts, the range we'll see will start to shrink a little bit. So we set different expectations around what we want to do, either as a momentum trader or as a contrarian. So it's a really interesting takeaway. And this is, I would have kind of expected the Aussie to exhibit that behavior, but it's really interesting to reinforce that with the stats themselves. So it's a really good takeaway from this one.
Yeah, and we've broken down just a couple other segments to kind of, there were a lot of lines in that last one, so breaking it up a little bit. But here again, you can see a lot of volatility going into that euro, when looking at European currencies, just the euro, the pound, and the Swiss franc. And so it was interesting to me to see that dollar franc over the past 3 months has been more volatile than these other. I mean, we've seen it near historic lows, definitely more so than these other two until now. But yeah, I didn't expect volatility to be a lot higher there in Swiss franc.
And this, Swiss typically is that flight to quality trade that isn't quite as locked in as it used to be. If equity sold off, the dollar may get a bid, but Swiss would be the one that doesn't. Swiss stays or gets a little bit stronger. So traditionally, I think what we saw here is the takeaway is that we saw a vol crush in euro pre-election. The Swiss kind of always would traditionally sit on top of that, and actually it would sit on top of even the euro would sit on top of cable, which it wasn't doing. Sterling. So this just says we saw an incredibly compressed environment for euro vol right now, which is good for us as traders. That gives us a bigger range to trade. It means that we set our expectations a little bit differently about where we want to get in and where we want to get out. But it's an interesting takeaway that I think this is I mean, vol kind of reverting, but in a different way. So we didn't see uniformly the Swiss vol sitting on top of euro vols and euro vol sitting on top of cable vol. This has changed a little bit. So what this is telling me is that there is a lot of extreme built into euro, not so much in cable. And Swiss is, as you would expect, the Swiss vol, while it expanded, it really is just kind of back to mid-range, where your euro vol is sitting almost twice of what it was. So I think it talks to a little bit about the specifics of where, again, euro, one of the largest traded currency pairs against the dollar. Yen comes in, close third is euro yen. So those are the three major dollar crosses in terms of notional that's transacted every day and over the long run. So it's interesting to see that euro take that really leadership role in terms of movement as we walk through it.
Yeah, absolutely. And then shifting over to commodity currencies, this one looks a little surprising, but really no surprise when thinking about how much of a U.S. dollar story this has been recently. That when you're seeing volatility for the Canadian dollar, the dollar against the Canadian dollar being so low, kind of checks out, right? We're seeing those very similar and perhaps moving in tandem, not as big of moves. But yeah, I mean, historically over the past 6 months, we've seen higher Kiwi dollar volatility, and now Aussie dollar taking over.
Boy, it really reinforces what we saw through
Isn't it crazy?
October in terms of just the crush of people, the vol crush. Now Canada is interesting because Canada typically, it may wear the commodity skin a little bit of the crude oil correlation. That's less relevant than it used to be. But Canada, when there is a U.S. dollar move, Canada tends to attach itself to a little bit. So Canada will kind of run with the dollar and run back against the dollar. So that correlation or that vol, while we're off the incredibly low levels that we saw right going into the end of October and the pre-election, you wouldn't expect Canada vol to explode if it's just a dollar move. Now there are certain things that will be Canada specific that will drive it, but you would expect to see Canada in dollar moves kind of stick to that dollar trade, be a little less volatile against that. So this really speaks to Aussie getting that elasticity back to it, Kiwi getting that elasticity back to it. We're getting better trading ranges to trade both those products. So really interesting.
And this kind of speaks, this Canadian dollar story speaks to what we were talking about earlier in the Australian dollar. If you look at the price chart over the past couple months, you've seen just a lot of one-way action in that dollar appreciating against the Canadian dollar, just taking higher and higher. Doesn't necessarily mean that volatility is going crazy, because obviously it was coming in, but that's all one-sided action.
And it was just the dollar move was pulling the Canada along with it a little bit, dollar Canada along with it a little bit, but again, in a muted degree versus what we saw in the Aussie and the Kiwi. So, what that creates is, when you look at that, you can now think about, and this implies, and we'll see, when you look at Aussie Canada as a spread, which is a very actively traded spread, you will
look at that.
see.
I'm right there.
Minus
I got you covered.
He still works at 110%. It's unbelievable. What else can we remove?
Please carry on.
Wow. No, go ahead. So so what this really talks about is, again, walk us through what this is telling us, which is really interesting.
Yeah, I did think this one was really interesting because you did just mention the euro yen earlier. A lot of that volatility coming in.
Right.
We saw a lot of yen story prior to the election, and now we're seeing that come in. And I mean, the range for Aussie Canada, kind of where it is, but on the upper end, we did see an uptick. But yeah, I was surprised at how consistent that volatility is.
Yeah. So removing the dollar. So what we've done with all three of these pairs is they're tradable, which is great. They're easily, in other words, you don't have to sell a certain amount of one, buy a certain amount of another, using the other product sets. One of the great things about SpotFX is you could trade this as a single unit and then choose whatever size you want. And what you're doing is creating that next level of diversification. It's truly a non-correlated, even the Aussie Canada is non-correlated to the dollar. You're looking at the relative relationship of just two currency pairs to one another without a dollar component into it. So diversified away from, this is your next level of diversification.
Right.
Adding FX trading into your core trading is a level of diversification, because FX trades are not necessarily correlated to your core equity portfolio. This is the next level of diversification. And next level of, when you look at opportunity, if you're looking for, okay, I've seen the dollar trade, it's kind of one way. Is the Aussie Canada trade the same way? And we're seeing a spike in all the vols, but and again, that euro yen was primarily, pre-election was all yen moving and the euro not.
Yeah.
The yen again going from sub 140 all the way back up to, we saw 155 last night. So I mean, that's a 10% move.
Seriously.
In a month, in an FX pair that on average moves 3% a year. So that's a big move in euro yen, or in dollar yen, excuse me. So I think this speaks to looking at the next set of trades that you might be interested in. These are going to give you a different set of extremes, but you should really, you want to look at liquidity, the ability to size appropriately, and if you're looking for diversified occurrences across your portfolio, looking at non-dollar pairs, you shouldn't be whether it's euro in the base and dollar in the quote currency, or Aussie in the base currency and Canada in the quote currency. This is the left side of the quote, right side of the quote. You should be indifferent as long as the markets are attractive and there's liquidity in them and you can get in and out, trade the size you want, depending on what you're looking for. If you're a contrarian or a momentum trader, all of these trades provide you unique opportunities that aren't necessarily all putting the same trade on in the same direction. And I think we all are looking for, how do I find that next level of diversification? This does it for you. And I think this speaks to the euro yen trade. The collapse of vol there speaks to the euro lag starting to catch up with the yen lag. And the bounce in Aussie Canada speaks to the divergence we've seen between Aussie and Canada. So interesting takeaways on all these, Glenn.
And I do like pulling up the euro cable trade here, because that is sitting at historic lows, and we didn't see a pop or a contraction really heading into November.
So what does that tell you?
You know, that it really is kind of a diversified play here.
You're absolutely right.
And even in these other pairs where you would perhaps think that, you know, there is no dollar component. I mean, the yen historically, a lot of these dollar yen, euro yen moving in tandem with U.S. rates, even so, on just greater yen weakness being affected by that. So still some kind of derivation of a dollar story, but yeah, that euro pound, really nothing there.
This is
sitting at historic lows.
great stuff, great context, and we get an opportunity to get these chunks of movement, these spikes of vol, and walking through this is great. So this has been some fantastic research.